Here are 3 reasons why to subscribe to Fridge Financials on YouTube. Number 1, it is free, which is the best price that you can pay for this kind of content. 2, I am completely transparent with all of my investments. And number 3, I have a variety of educational videos every single week. Now let's get on with the video. What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we are doing the Trading Ticker Challenge recap of the week. The first week is now officially in the books. The market is officially closed. And I'm going to be recapping a couple things, my trades I've opened for the week, my logic behind them, and where do we go from there? And we're going to look at the spreadsheet, we're going to look at the numbers, and see how the portfolio is going to be hopefully performing compared to the S&P 500. So if you're excited for today's video, make sure that you smash the thumbs up button, subscribe to the channel if you've not already done so, and turn on the bell notifications. We are at 41 subscribers. You guys are absolutely fantastic, and the support has been phenomenal, and I've loved posting content for you guys, so thank you so much for doing so. Again, if you want to watch these longer videos and you want to watch the short recaps, be like, Fridge, I just want to see, what did you trade? What are you doing in like 30 seconds? At Fridge Financials on Instagram, I have all my trades posted there. I also have it on TikTok, if you have TikTok, at Fridge Financials. And I've also put the shorts in here on YouTube as well, in case you just want to see a quick glimpse and not watch these longer videos. So without further ado, we're going to get into it. As you can see, we've got a lot of trades over here on the right-hand side. The Alibaba spread that I have traded right here, don't worry about it. Tesla one, again, these are long-term ones. The only trades that are used with this trading ticker challenge is the Boeing, Penn Entertainment, SoFi, and Xpeng. These 4 companies are my current trades that I have going on right now in my trading ticker challenge. And if you haven't already understood what it is, again, I started with $5,400, and my goal is to outperform the historical average of the S&P 500, which is 10%. If I can get over 10%, I'll be happy. You know, it means I'm doing something right and not in the negatives. So the first one that I want you guys to look at is, again, I opened up a Boeing put credit spread, essentially. I opened this up after the Alaska Airlines fiasco that happened over the weekend, where the door like blew off of the plane, which was absolutely insane. And so Boeing sold off like 9%, 8% that first day after that. And at the end of the day, I got it and I was like, you know what? I feel like this, I don't want to say it's a total reaction. It's definitely not. It's a very valid reaction to the market and to the company and everything else. So, but I wanted to take advantage of those premiums. When stocks fall, those put premiums go up higher because they're closer to being in the money. So I wanted to take advantage of that. So I sold a Boeing put credit spread option. Again, if you're wondering what a put credit spread is, all it really is that I am selling an option like I do before, but I don't have the cash available to buy 100 shares of Boeing. So I instead buy a put option below, and that allows me to use that as collateral. And I can keep the strike price as a difference, which would have been at $33 when I first opened it. Right now it's at $46. Which means I'm actually down $13. So I would have collected $33. It's right now worth $46. So I'm actually down $13 because I could have opened it for more. So the nice thing though about this is that since the market is closed for the 3-day weekend, that means more time is going to decay on this position, whether the market is open or not. And by that I mean this. Right now the position, I love Robinhood, by the way, for doing the simulated returns because it allows me to track and see what I'm doing here. So the Robinhood simulated returns right now, the trade's estimated at about $11 down. That's what my estimated returns are as we speak. We have a 3-day weekend. The market does not open up again until Tuesday the 16th. So as you will see, even though the markets aren't open, this is the decay because this contract expires next Friday. So as time goes on here, as I go across the screen here, again, this is Saturday. Actually, this is Sunday now. We're now into Monday. Markets closed Monday because of Martin Luther King Day. And by the time we get boom right at January 16th when the market opens between 9 and 10 o'clock in the morning here, my position's already back in the green, $15. And it's not going to fluctuate right now because the market is closed. So the share price of Boeing isn't going to change. So I could possibly sell it off early, take the premium, see what happens on Tuesday morning. A lot of things are going to happen between now and Tuesday. So I'm not selling it yet. I'm not losing. I'm not trying to lose money on it just yet. If I see something go crazy, then I might sell it off for a loss. But again, come Tuesday morning, I'm in the green. Might be awesome. So that's my first one I'm looking at. We also got Penn Entertainment. Now, the Penn Entertainment one is insane because you look at the Penn company as a stock, right? So Penn Entertainment, if you're not sure what it is, they are a gambling company. They do a lot of with sports betting, casinos, and those kind of things. And so I opened up my spread. I believe it was on the 10th. Let me see if I can find out. It was here somewhere. I think, down here. I opened up my spread on January 10th. So January 10th, I opened up for $64. Not even the spread, I was just selling it. So January 10th, that was the end of the market, which was about right here. And I was like, oh, okay, it already had kind of a little bit of a sell-off here. So I was like, okay, I'll maximize the premiums. These contracts getting closer to the money. Premiums go up. I collect more money. We move on. I had a big spike for whatever reason between 9 and 10. And I was like, dude, I just cashed in a crap ton. It was up like $20-something on my trade out of the 60. So I was getting hyped for it. And then it sold off. And I don't really know why. I was looking at the news. I went on like Bloomberg. I was on Seeking Alpha. I was on Yahoo Finance. Couldn't find anything yet. I don't know if it's insiders. I don't know if it's just people are just switching money out of gambling. I think gambling, sports betting, casinos is here to stay for the long term. I think it's only going to increase as years go on. So do I mind owning 10 at $22.50? Not really. So right now, if this contract was to expire like next week and it was down at this price, I would have to buy the shares at $22.50. But we'll see. So right now, that one's down a lot. That one's down, essentially, quote unquote, it's down, not quote unquote. And essentially, it's down $51 right now. But, again, that's just because it's the early stage of the option. The option doesn't expire until next month, February 9th. So we got time for that one. We'll see what Penn does. We'll play it out by ear and go from there. We got two SoFis here. Basically, if SoFi goes below $7, I'll have an average price for 200 shares at $7.25 because I have 100 shares I'll be buying at both these prices here. And again, halfway between the $7.25. Again, that one, same thing. A lot of those, growth stocks, a lot of those, stocks that are looking to, grow and expand, had a lot of selling off today. It seemed like across the board. A lot of crypto markets were down. It seemed like Marathon Digital was down, Riot was down, Robinhood was down like 5%. A lot of ones that have like that crypto in there. I think maybe because people are selling the news that the Bitcoin ETFs are now live. I don't really know. And the Xping one, again, same thing. Xping has had just a rough whatever it is. So if you go to this trade, if you go to the stock here, it's down, 15% last week, which is absolutely insane. It's down 20% in the last month. But here's a nice thing. I'm not going to be forced to own Xping until it hits $10. So even if it comes down another, 10, 12%, whatever it is, and I got to own it for a discount, I'm buying the shares at a discount and I'm cool with it. Again, it's another EV company. They just announced they're talking about possible flying cars in 2025, which is absolutely awesome. So, I don't mind it. I'm not owning it for $10 a share. It costs me $1,000. I put it in my portfolio. I sell options again. And then we kind of move on from there. We can, keep moving. So anyways, those are those trade options I have right now. Again, so Boeing, I was basing it off of the crazy sell-off after the door basically exploded. Penn Entertainment, love owning it. Gambling company, long-term, I see a really good thing for it. Again, no financial advice, of course. SoFi, I like what they're doing digitally. Again, with interest rates coming back down, hopefully people will start to ask for more loans at lower interest rates, which means that SoFi would have more money to loan out and go from there and make some money. And Xpeng, again, electric vehicles. I still see a lot of potential for the future electric vehicles, as you can tell with my Tesla position right here of 100 shares. Anyways, so let's take a look at the spreadsheet. Now, this spreadsheet here from the last video from Friday had a lot less than what I've got right now. I've fooled around with it a lot. I've worked with it a lot. And as you can see, first things first, I have 4 trades right now that are open. I'm highlighted on blue, so I know they're open. When I sell them off, I'm going to close them. I'm going to make them gray, so that way you guys know the difference. So the Boeing option here, again, is a put credit spread, $500 collateral. It gets me a $32 profit loss, which is about a 6.6% return if this expires worthless in 2 weeks. So I make about 6.6% on $500 in about 2 weeks. Credit spreads are definitely something to consider trading if you're thinking about doing options, because it's less risk. One of those trading $500, I can always just sell early and take a loss. But you also still get decent returns in a reasonable amount of time, which I think is great. I'm making 6.6% on $500 in a matter of 2 weeks. So it's always there. Xpeng, $1,000 collateral, $30 profit, 1.3%. Nothing crazy. Again, Penn was $22.50, $64 profit, 2.84%. And then again, 2 put options against SoFi, a total of $14.50, $61 profit, so 4.21%. So that was what I had originally. I have this little section over here. now I've added more. First things first, I have the S&P 500 indice in here, which I think is awesome because it's going to allow me to see how is it performing versus how am I performing as a result. And the NASDAQ's there, the Dow Jones is there, and all that good stuff. But over here on the right-hand side here, I also have it with what happens when I'm buying the shares. Because what happens with these trades here, except for Boeing, because it's a spread, with these three trades here, Penn, SoFi, XPeng, these are all trades where I might have the potential to own the shares. And again, at some point, I probably will be owning shares of some company, whether it's SoFi, whether it's XPeng, whether it's whatever. You know, I already own Tesla shares right here. That was one example of it. So what I have over here on the right-hand side here is now what happens if I get a sign? And Penn Entertainment right now is a good one for me to use because right now it is below what my strike price is I want to buy it out, which is $22.50. That's $22.44. So what I have here is on the other side, I'm able to track. I say, okay, I've got Penn Entertainment here, and the share price is $22.46. It populates right in. That's before the market close. I have 100 shares of it, and my average price would be $22.50. So as you can see here, it also already populates all the things over here. So here's the current value of the 100 shares. Here would be the position value that I paid for. And here's my profit loss. I'd be down about $4. I think this is a good thing to keep track of because, again, it does account for part of that $5,400 I'm trading with. And as you can see here, as a result, you can see the numbers here. I started with $5,400. The profit is coming from the profit from the trades plus the profit I have on the shares or the losses. So that's why it's 167. It's 167 because I made 171 in premium. Take away the $4 if I had the Penn shares as well. So I'm at $167, which is my total right here. Taxes I'd be paying $36.74. So my percent is 3.09, but my net profit is 130.26 after taxes. It means my net percent is 2.41%. If I was to assign those shares right now. Now again, with this spreadsheet right now, these are all values that are not finalized because maybe I sell them early. Maybe I have to take a loss on it. Maybe I lose money on the volume one, for example, right? Like these are not guaranteed yet. What I want us to be tracking to look at is what's going to happen when these close out. When these close out, what is this number right here? Because that's when I'm realizing those gains. This is my theoretical percent return, which is also a very, very good return because it's 2.41%. And I've been trading now, this would be the first month because these all expire by February, so it'll be a month in. So 1 month in, I'm making 2.41%, times that by 12, I'm looking at 26, 27% net return. Which is a lot better than right now. And as you can see, if these options do what I want them to do and I don't buy any of them, I'm still outperforming the S&P 500 by about 3 times as much, which is awesome. So again, this is where we're at right now. Again, theoretically, this is what would happen here. Right now, I don't own any of these here, so I'm going to have to put my profit loss at a 0 because I don't have any shares just yet of this. So here are the current numbers I'm looking at right now, just to kind of summarize the trades here. We started at $5,400. We have already collected $171 worth of premium, which is great. Taxes, I'm paying $37.62. So my percent return is 3.17, but my actual net percent is 2.47 right now. Not finalized until these trades close. So, but again, nice to see so far doing better than the S&P 500. So, love to see it. Thank you so much for watching today's video. I hope you've enjoyed it. If you made it this far in the video, make sure that you subscribe to the channel, smash the thumbs up button as we always do. Leave any comments down below about the trades, about possible positions, about how to trade options, about what to add to the spreadsheet. Please leave them down below in the comment section. I love to interact with you guys down there. Thank you so much for watching. I hope you guys are making money in the market, and I will see you guys in the next video.